Hello guys, this is FX Bride, the trade guru. So listen guys, on this video I'm going to be showing you guys how to use the Fibonacci retracement tool to analyze the market and trade retracement with accurate precision. And I'm going to be showing you guys all the nuances and how to analyze this kind of market and the different ways the market will form for you to know exactly how to use the Fibonacci retracement tool. Now listen guys, for instance, I'm just going to go right into the video. Now take a look at this example, this particular time frame we are at. This is the volatility 100 and this is the 1 hour time frame. So the first thing you want to do is that you want to understand the direction of the market, the trend of the market. So in this case, what you want to do, don't take too much time in trying to understand the trend. Just look at that, look at the highest point in the market. For instance, this point is the highest point in the market. So what you're going to do is that you're going to draw a trend line from this highest point all the way, touching the next highest point, and just stretch it all the way to the future and see what it gives you. So that will help you to understand the current trend of the market. Now look at this. Now I've been able to draw a trend line. Now see this trend line coming all the way from this top point, touching this second touch point and all the way down to the side. So you can see that in between the space, the market has been in this downtrend. At some point, the market was able to break. Now the moment that the market has been able to break this trend, this place, you can now begin to think that the market wants to begin an uptrend. Now listen guys, what is a retracement? Retracement is that you already know the trend of the market, but now you want to trade anytime the market makes a move in the opposite direction of the trend. Now guys, so you can see from this point, the market has been able to come down and make this move and been able to break. Now this move is called the 1, 2, 3 move. What the market did is that the market came up, came down and broke. So now this kind of move, 1, 2, 3, is very important for us to consider that this market has actually broken trend. If the market has come from this point straight up and broke this place, it will not be considered a very good breakout from this trend. So because the market was able to do the 1, 2, and 3, beautiful, we've been able to understand the breakout. Now listen guys, so what we're going to do is that we're going to take out our rectangle tool and try as much as possible to map out the resistance area that we can see after this breakout. Now there are a few resistance area, but I want you guys to map out as many as you can find. So you can see what I've been able to do. This particular top point is a resistance area. This bottom where the market was bouncing from is a resistance area. So you can see how it acted here and here. So these are good resistance area. So the market is going to break out and we're going to expect a retest. So now let me just go right into the future. So let me show you guys how the market was able to finalize its move. So now what you can find now at this point is that first of all, you can see how the market was able to go up and come down to break. But this movement the market made down here is not a good retracement. The reason it's not a good retracement is if I take out my Fibonacci retracement tool and I measure this retracement, I would find that this retracement didn't touch the 38.2 retracement. It just stayed in between the 23.6 retracement. So when the market was coming down here, it didn't touch the 38.2. So because it did not touch the 38.2, this small movement down here will not be considered a retracement. So what I'm going to do is I'm going to stretch up all the way up to this point where the retracement became obvious. So you can see how the market got to this point and started retracing. So the market started retracing all the way and touched the 38.2. So there is a rule that states that any retracement that doesn't touch the 38.2 retracement is not considered to be a retracement. So the moment the market was able to retrace all the way to the 38.2 retracement, we consider that this market has begun a good retracement. So now I've been able to touch the 38.2 retracement. What I'm going to be looking at is that I want this market to also touch this my support, this my resistance area. Remember this red line I drew here? I want the market to also touch it. So the moment the market was able to come down to touch this my red area, then I will now begin to think about entering the market. Now, how do I enter the market? The way to enter the market is now that the market has been able to touch this particular point, I'm also going to draw one more line. So I'm going to zoom into this place a little bit clearly so you can see. What I'm going to do is I'm going to take out this my line and I'm going to draw another line here right? So I call this kind of lines the change of character lines. So now that the market is here, if the market is able to break away from this point, now I will begin to enter this market somewhere around this point. Now I'm going to put my buy here and put a sell and put a stop loss just below here and put my TP at 1:1.5 or 1:2. And you can see from these, I will be able to hit my take profit. So guys, I hope you're able to understand this. I'm going to show you another example so you can be able to understand exactly what I'm talking about. And so guys, let's take a look at this example. Now what you can see also in this example is that the market was coming down all the way in this fashion. So I told you the first thing you want to do is that you want to join the trend line so you can be able to understand the trend of the market. So what I'm going to do is I'm going to put my trend line here and I'm going to connect these tops and this top together. Now, because of these, I've been able to understand how the market was moving on this particular trend. This is the downtrend. So the moment the market is able to break this trend line, like I told you, look at the way this market broke. It just came from here and went up straight here to break it. So this is not good. I need to see a 1, 2, 3 move either after the break or before the break. So there is no 1, 2, 3 move that happened here. So this market just came and broke. But I'm going to wait for the 1, 2, 3 move to happen before I will consider this an uptrend. So the moment the market breaks, it makes a retest and breaks again. So this is my 1, 2, 3 move. 1, 2, and 3. Now it is only after this 1, 2, 3 move I will begin to consider that this market has begun an uptrend. So now after this 1, 2, 3 move, I will now begin to draw my lines, which are my zone lines, to map out the support and resistance zone. So this is a good support and resistance zone. So guys, you can check my other videos if you want to know how to draw support and resistance zone with precision. I have a video where I talked about support and resistance. So now guys, you see how the market was able to come all the way to this point. Now remember, this is the 1, 2, 3 move. 1, 2, and 3. So the market has been able to make that. So the next thing I need for this market to do is to come and retrace into one of these my red lines. Now, when the market is able to retrace into one of these my red lines, I don't just start trading. What I want to figure out is that this retracement is up to the at least the 38.2 Fibonacci. So I'm going to pull out my Fibonacci and I'm going to test that zone. So I'm going to pull it out from here to here and I'm going to test what place it's retracing at. So when I zoom in, you can see that the retracement is happening at the 61.8 retracement level, which is somewhere around here, which is a very good retracement level. So now I'm going to remove it because now I've been able to figure out that that point is a good retracement. So what I'm going to do to enter my trades, I'm going to draw a change of character line somewhere around here, right? And the moment the market is able to break from this change of character line, I will be entering my my trade. My SL is going to be below this red line somewhere. Just give a little pips below and I'm going to be taking a 1:2, and you can see how the market would have been able to hit our TP somewhere around this point. So guys, I hope this was a very instructive tutorial. So like and subscribe and turn on the bell notification. Watch out my other videos and you're going to be understanding a lot more about how to trade. So I'll see you guys in my next video. Bye.